Now in today's video, you'll be getting a few key points on how you can become a better investor for 2021. Now, so many people are saying that, cash is worthless these days because government is printing so much of it.
In my opinion, don't own bonds and don't own cash
And so many asset classes are running up in terms of prices. So being invested is important. But more importantly, if you don't get invested, it's very difficult to reach your retirement goals. It's very difficult to reach your financial goals, correct? So with that, I'll actually be touching in this video golden nuggets of wisdom to help you if you are a new investor or even an experienced investor. Now today I'll be using something that I learned pretty recently, which is the Dunning-Kruger effect. I'll be using it to illustrate the first point as well as the last point. This is how I'll be rounding up today's discussion. With that, let me roll in the intro video. Hi guys, welcome back. Now let's dive on to things. I guess a typical new investor goes through this process because I myself did that many years ago. How it actually starts is usually this. You come across an article on a popular forum or Facebook group that you are part of. And this article might read something like this: S&P versus STI. And it goes on to justify that S&P 500 is a much better investment for you, correct? Because simply there's a lot of tech firms that are dominating the world. And after reading it, you get motivated. You want to find out a bit more on how you can invest in technology. And very soon you realize that, hey, there's actually this thing called NASDAQ. And there are actually ETFs that focus on NASDAQ, such as QQQ ETF. And wow, what do? You actually go on to YouTube channels to find how you can actually invest into QQQ ETF, correct? Now, with that, you actually shown many channels that really reinforce the benefits of investing into QQQ ETF. They'll tell you that you can get diversified. They'll tell you that this sector is likely going to outperform. It reinforces your conviction after reading that article. But you're actually not settled there. I guess this is usually the story. And if you agree, leave in a yes in the comment sections below. What happens next is you want to take it a step further. You go and think a bit deeper in it, and very soon you come across potential ideas. Maybe for your work, you have to start using Zoom and you think, hey, technology is a great idea. Maybe I should, invest into Zoom because Zoom is a technology business that is going to benefit, right? So what happens is you go to the same YouTube search bar and you key in, should you invest into Zoom stock right now? And invest into Zoom brings you a few more other channels that you should follow. They reinforce that Zoom has a great business. They reinforce that COVID-19 is going to reshape how workflow is actually being done. And very soon you're convinced that, hey, Zoom is actually better than being invested into QQQ ETF. You've taken your research one step further. You seem a lot more confident, correct? And that is actually where the problem starts. Take a look at this. This is actually what Dunning-Kruger is about. Dunning-Kruger is actually a research on this effect that we all have experience in. When you're a novice, you're very scared. You don't have confidence. On the bar on the left is confidence. On the bottom is knowledge and feel. And for novice, as you start researching very quickly within 1 hour, 2 hours, you start to absorb a lot of information and you start to realize that you've uncovered the lowest hanging fruit in terms of knowledge. But the real mistake is when you get there, you have this mindset: I know everything, I don't need your advice anymore. For example, if I'm looking to buy a computer, I research a bit. Hey, I think I know the specs very well, but actually I also don't know that much. So when it comes to investing phase, after you research on QQQ ETF and research on Zoom stock, you very quickly think that you know a lot about investing, a lot about growth stocks, a lot about what technology is going to shape the world and grow in terms of revenue. And very quickly you start to think that you know quite enough to get invested, and very soon you start punting it. Your confidence is at an all-time high. This is actually where you need to take note of it. This is peak recklessness. And if you want to invest better for 2021, if you're a new investor especially, take note of this. Peak recklessness is a phase whereby you tend to think you know quite a lot, and you tend to become overconfident. So if that is something you are aware of right now, it's going to help you shape your risk appetite and decision-making process a lot better. Now, the internet has a lot of information. There's no lack of it. The problem is too much information. You start to filter out things that are against your initial point of view because you have that confidence level already. Second point on becoming a better investor is to look long-term. This has been said to death already. It's very cliche. But let me help you understand what does long-term really mean. Because some people think 5 years is long-term, which is not correct. Let me show you the first thing, which is actually NASDAQ's performance. 2000 had that tech bubble, correct? So imagine this. You are now an investor in the tech bubble. And if you have a short-term mindset, you could get stuck in this bubble crash. But if you are thinking very long-term, the internet will eventually take over the world, which is what has happened 20 years down the road. you realize that, hey, even if you invested at a wrong point whereby the things are going up, as in this green arrow, you'll still be fine even after 10 years, even after 12 years or 15 years. Assets usually appreciate, especially if you are diversified. So even if you invested wrongly to NASDAQ and then dot-com bubble crash, you'll still be fine if you invest 10, 12, 15 years. Now, if you've invested right at the very peak, very unfortunate, correct? But you've kept a long-term mindset. What I'm trying to show you also in this further arrow in yellow is that you still double or even triple your money, even with a good enough long-term time frame. Even if you got timing wrong, if you hold 20 years, you'll still be very, very well served in terms of performance. So that reinforces long-term. Long-term is not 5 years. If you ask Warren Buffett, he has this quote to share. His best investment time horizon is actually forever. Some people think that his words of wisdom are a bit dated. Maybe that's true. So I'll show you someone who is newer, which is Cathie Wood. Cathie Wood is a very up-and-coming investment manager. But some people have also not seen her investment time horizon, which is this. If you haven't seen it already, their investment time frame is 7+ years, which means the investment thesis is looking at least 7 years ahead, not looking at next year or 2 years ahead. So in terms of performance, they expect 7 years later to have real fruition. So that reinforces the fact, if you want to invest better for 2021, make decisions long-term because that's going to help you ultimately. Now, the third point to become a better investor is to be diversified. Now, let me share with you a story why. Have you heard of Nifty 50 before? Nifty 50 actually happened in 1970s, and during that period of time, 50 companies were actually identified as high growth companies deserving of high valuations, and stock markets were actually very rampant at that point of time also, similar to what we are seeing as of right now. So the story goes that after that peak in 1970s, stock market actually crashed. A lot of companies did not survive the crash, but also some of the companies identified to be the best of the best in that 50 list actually still made it through. The moral of the story is you're never sure which company actually survives for the next 10, 20 years. We cannot be 100% sure. So being diversified is a logical way to stay safe, because even the best of the best companies can have changes made to their fate itself. Steve Jobs got ousted from Apple. Uber CEO also got ousted from his firm. So things can really change beyond your expectations. If that, smash your like so more people can see valuable content like this. And again, inviting you to press on the subscribe because we're releasing videos every week, and I have an interesting video upcoming, which is my thoughts on US equity, whether they're expensive or not. So if you're keen, subscribe and stay on for it. Now, the fourth important point, how you can become a better investor for 2021, is to do research. Research is very important. Especially if you are looking to do stock picking, researching is part and parcel of the journey. Why do I say so? If you want to listen to what Cathie Wood, she's saying that she has strong convictions on her ideas. That's why she believes that drove her to be successful. You cannot take stock tips from one particular source or another. You have to really deep dive and think for yourself and look at every single angle there is and slow down decision making, because when you become deep in terms of research, you tend to realize you have a lot of things that you do not know. Let me pull up this chart again from Dunning-Kruger, which is where I started off. Remember at the start of the video, I was saying that for someone who has just developed some knowledge, the confidence level skyrockets. They becomes irrationally overconfident. And what happens and how you can save it is actually with more knowledge in the field done through research. He or she, any person will start to realize that there can be so many other points of views, there can be so many potential disasters that they can't prepare for everything, and it's actually not as simple as it seems. That brings upon better risk management. So hopefully that is something that you take away. And with continued knowledge in the field whereby you spend time on the subject itself, you eventually develop expertise. And that's where you can actually invest safe and invest well. That takes some time to get, but eventually everybody follows this curve. So with that, I've ended my presentation, how you can become a better investor for 2021. And if you're interested in a sector that I've actually done some research on, which is on gloves, follow this previous video. This is actually where I deep dive into Riverstone Holdings, which is one of Singapore's top glove manufacturers. And with that presentation actually shows you my thoughts as to how vaccines will actually affect the glove industry. With that, I'll sign off. Take care and goodbye.